Hi everyone, welcome to our channel Money Genes and this exciting video where we are going to share some really important insights on stock market basics and how to screen the stocks for investment purposes. And we will start with a very important question कि क्या आपको भी लगता है कि stock market को समझना मुश्किल है? And that there are too many things to understand like market cap, price to equity, industry analysis, fundamental analysis, financials, cash flows, capex plans, ROA, ROE, debt to equity, management, shareholding patterns, book value, forensic accounting, etc., 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 and the list goes on and on and on. So, yes, while all of these points are important in their own way, but let's try and simplify this through our video and share that वो क्या पांच छह बड़ी चीज़ें हैं जिस पे ध्यान देकर एंड जिनको अच्छे से समझकर आप स्टॉक्स को सिलेक्ट कर सकते हैं, स्क्रीन कर सकते हैं और इन्वेस्ट कर सकते हैं। और हम ये सारे पॉइंट्स एक एक्चुअल लिस्टेड कंपनी के एग्जाम्पल को लेकर भी समझेंगे फॉर कंप्लीट क्लैरिटी एंड अंडरस्टैंडिंग. So do keep watching this video for this content. So coming straight to the point, the six key things that we would talk about in this video are market capitalization, which is simply the total value of the company on stock exchange and is basically nothing but share price of each share into total shares of the company. Second is the financials of the company, in which we look at how the company has performed in terms of revenue growth, its earnings growth, both operating profits and net profits, as well as stock price growth. And we should see this data over different time periods, like in last 3 years or 5 years and 10 years time period, to understand long-term trends and also how these numbers have been in past few quarters to understand the recent trends on revenue and profit earnings, as this is one of the most important factors for any investor. And as we shared earlier, we will look at an actual example of a listed company as well in some time for all these data points. So, third point is return on equity, and this is calculated as a percentage by dividing the net earnings of a company by total equity of the company. And ROE हमें basically ये बताता है कि कंपनी कितनी एफिशिएंटली शेयर होल्डर इक्विटी को यूज करके प्रॉफिट्स जनरेट करती है. एंड हायर द ROE percentage, the better it is. And if we look at Nifty 50, which is our stock market index, it has also it has a weighted average ROE of basically 15%, and recently only it has crossed that 15% mark. So any company's ROE, let's say if it is greater than 15%, it is a good benchmark to consider. Fourth point is the reserves and surplus. So this is also a very important metric, and what we should look at is that whether this metric is increasing over a period of time, because it indicates strong business model and good financial health of a company, and that company is generating consistent earnings and thereby adding to the reserves. So this is again a very important point. Fifth point is the debt levels of the company, and we should check whether the company is debt free or not. And if not, then what are the debt levels? What is the debt to equity ratio of the company, which basically means company's total debt divided by total equity of shareholders, and this ratio tells us how financially stable the company is. Generally, as a practice, debt to equity ratio of less than 1 is a preferred ratio, एंड द लेसर इट इज़ द बेटर इट इज़, बिकॉज इसका मतलब ये है कि कंपनी को फंड्स बोरो करने की ज़रूरत नहीं है इंटरेस्ट पे, या बहुत कम ज़रूरत है, एंड उनकी शेयर होल्डर्स की इक्विटी इज़ इनफ टू रन इट्स ऑपरेशन स्मूथली, विच इंडिकेट स्ट्रॉन्ग फाइनेंशियल हेल्थ and relatively low risk for investors, and hence a debt to equity ratio of less than 1 is very favorable. Sixth point is the shareholding patterns. Again, this is also a point which is important, because this is a point where we can see how the shareholding patterns or trends of FII and DII have been basically our foreign institutional and domestic institutional investors, and also how the trends on the promoter shareholding have been, whether it is stable, increasing, decreasing, because that also indicates confidence of the promoters of the company in their business, and that will also help us understand if promoters have pledged their shares or reduce their shareholding in the company. So that is again important to understand. So these are six key things as a practice that we can look at to screen the stocks. So now let's look at a live example and understand all these points with an actual listed company. And in case you feel that there are any points that needs more explanation, then please do let us know in comments so that we can make a detailed video on that to share even more clarity with all of you and make it as simple as possible. Okay, so the first point we discussed was market cap, and for starting your investment journey, we recommend considering large cap companies only, because large cap companies are usually the top 100 listed companies with a market cap of 20,000 crore or more. So that is the definition as per SEBI for large cap companies. And why large cap companies? Because usually large cap companies have a strong corporate governance, good accounting practices, and good quality of management, etc., and have also a relatively lower risk for investors than mid cap or small cap companies. And the example we will take would also be of a large cap company to explain the rest of the points. But we will not share the name of the company, as this video is more for learning and educational purposes and sharing our knowledge with you. So now let's have a look at this chart, which basically is the chart for profit and loss of the company, of a large cap company. This is a company with a market cap of more than 3 lakh crore, and hence it's a large cap company clearly. And we can see that the revenue of this company in last 10 years or so has been consistently increasing from 20,000 crore in 2012 to 25,000 crores in 2013 to 50,000 crore in 2018, and finally to over 1 lakh crore in 2023, which is a very impressive growth of about 17% consistently in 10 years period. When we also look at the operating profits and operating profit margin, that also has been growing consistently, with operating profits at 3,700 crore in 2012, moving to 10,000 crore by 2017, and now around 23,000 crore with very stable operating profit margins of 22 to 24%, which also has increased from 18% levels in 2012. Even net profits follow similar growth trends, with 2,400 crore in 2012 reaching to about 8,600 crore in 2017, and now at an impressive 15,000 crore, which means 6 times profit growth in 10 years, with a CAGR of about 20%, which is very impressive and healthy growth. Also, quickly, what CAGR means is basically compounded annual growth rate, विच मीन्स कि हर साल इस कंपनी के नेट प्रॉफिट्स 20% से ग्रो हुए हैं कंसिस्टेंटली फॉर 10 years. So that's what CAGR means. When we look at the ROE of the company, which is return on equity, that too has been in the range of 22 to 24%, which is well above 15% levels as a benchmark, as we discussed earlier, which indicates efficient returns over a period of time. So, all in all, this is a very good performance in terms of revenue growth, net profits, operating profit margins, and ROE, as we discussed. So, these are very few important points from financials point of view, which you should look at. If you look at the stock price growth as well, it has shown a very strong growth of 17 to 21% over different time periods, highlighting a very good long-term growth trend on the stock price itself. In fact, if let's say we would have invested 1 lakh in this stock 5 years back, then today that investment would have been more than double, and rather more than 2.5 lakhs, with a 21% return CAGR in last 5 years. So that's a great return, because there are very limited investment avenues that can double your money or more in 4 to 5 years time frame. So now we have seen the financials, return on equity, and the stock price returns of this company, which are very important parameters to understand. And now let's look at other points like reserves and debt levels of the company. And for that, have a look at this chart. So we clearly see that reserves of this company have been consistently growing as well, from 9,600 crore in 2012 to 36,000 crore in 2018, and 65,000 crore in 2023. So a very healthy trend again on reserves. And when we look at debt of the company, while that also has increased slightly and is around 5,000 crore, but it is well within the limits and only 8% of total reserves, which means that debt to equity ratio of this company, which will come by dividing 5,000 crore by 65,000 crore. 5,000 crore is the debt of the company, 65,000 crore is the reserves and surplus and equity of the company. We get a value of 0.08, and we discussed that debt to equity ratio of less than 1 can be a good filtering criteria or a good benchmark, and 0.08 is a far less number than 1, and hence this company from this metric is also a very very strong company and in good financial health. Lastly, have a look at this chart for shareholding patterns, where we see a very stable shareholding percentage by promoters of the company in last many quarters, maintaining 60% plus stake in the company. And even for FYI and DIS put together, it has been around 35% quarter on quarter, which highlights stability and confidence of investors in the stock, and that promoters have not diluted or pledged their stake in the company. So to summarize, these are the 5 6 key things जैसे हम स्टॉक मार्केट का जिसे हम स्टॉक मार्केट का सिक्सर भी बुलाते हैं. As you can look at any stock and evaluate it across these 6 points to understand its performance and health of business to consider for investment. And as we mentioned, large cap stocks are good stocks to start with for investment, as they have given some very good returns in the past, as we saw in case of this company as well. Also, one last tip or recommendation from our side: always try investing in businesses that you understand. यानी कि ऐसे स्टॉक्स जिसका बिजनेस या वो क्या बनाते हैं या क्या बेचते हैं वो आपको अच्छे से समझ आता हो, एंड यू कैन रिलेट टू इट. Many times a stock may look good as far as financials are concerned, or its returns are concerned, but we may not understand the business model of that company. So in that case, it's best to avoid them and only invest in companies whose business models you can understand and resonate with. And of course, these 5 6 points would always remain important. So we really hope you like this video and we are able to help you in your investment journey. And if yes, then please do like this video and subscribe to our channel for more such content. And do post in comment section if you want us to make the video on any particular topic related to stock market or financial investments or any financial concept. Till then, take care and keep investing and always stay healthy, as health is the true wealth.